Hi traders and welcome to the Technical Analysis Market Watch on Friday the 30th of June. So we've seen some really good movements this week. We saw the bounces off the key levels that we talked about last week on the indices and the currencies. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see that we've seen a pretty reasonable sell-off again. Once it look, it really has been a pretty solid sell-off for the entire week. You can see that we got the big push down last week at the end of last week on the daily chart, and then it came up and retested the 20 moving average, which we always like. But look, this little mid zone is a pretty important zone in itself, even though we haven't got a line drawn right there. Look, I'll pop one in to show you and demonstrate what I'm talking about. You can see here that all the way through here, you can see price hit it at the 20 moving average, but just as importantly, you can see all this support and resistance. See all of the support right through there, a week's worth of support and resistance, a week's worth of support there, and several weeks of resistance at this point here. So really, if it's going to come back after a big breakthrough of that level, that is the level it's going to bounce off. And you can see right through there, just above the 67-cent mark is where it got to, hit the 20 moving average, and then continued on its downward spiral. Now, look, there is talk of interest rate easing and rising in Australia at the moment. So, but it's obviously based more on what the US is talking about, and with the US potential interest rate hikes on the agenda, we're probably going to see a little bit of this kick in. So realistically, we're reacting to news. Hit 20 moving average though. Technical is what we look at, and it hit the 20 moving average and then rolled straight off it again. Now look, it finds itself at a place where there is reasonable support here at the 60-cent mark. It's slightly above it at the moment, but the 60 cent is where the other real support is. You can see through here. Let me just pop this line. This is secondary. There we go. Secondary support here at this level here. You can see we've got a lot of support right through this level here at around the 66. So if we break that level, then we're going to really start talking dire on the Aussie USD, okay? If we get a daily close below this level, we're back into the 65-cent territory, and probably the 65-cent mark flat would be the target we'd be aiming for in this instance. So, look, pretty good trading on the Aussie, really. I think that it's been pretty good. Realistically, a lot of that has been easy to trade. If you go to a 1 hour or even a 4 hour chart, I'll just auto fix that. You can see that we've been basically respecting all of the levels all the way down. You can see right through here that series of lower highs and lower lows, what we talk about all the time, hitting the 20 moving average and selling off. Okay, so it's finding a little bit of support at this level here. Okay, but at the same time, we know that we're looking for that 66-cent mark is the key level that we're talking about. If it gets back and breaks through there on a daily time frame, we're going to look at a pretty reasonable move down from that point onwards. All right, so we'll go over to the daily again, just to reiterate, very, very important level at the green line here, 66 flat. A daily close below there, and we start targeting 100 points down. If we do get the reversal and it starts to make a series of higher highs and higher lows on the other time frames, like say the 15, 1 hour, or even a 4 hour, then we can start to look at targeting the 20 and the 50 moving averages again at around that sort of nearly 67-cent mark. So pretty even rounded trading on the Aussie. I think you can get a reasonable move on it, but it just needs to break out of this little mini zone. All right, we'll move over to the US dollar CAD. This has had the opposite reaction to the Aussie USD. Obviously, you can see we had a pretty good bounce up to the 20 moving average, which is what we're really expecting of the other currency pairs now, really respecting these 20 moving averages again. You can see that we've got, it basically hit it and it has sold off a little bit from it. That was at around that level of 132.80. We know the importance of the 80 levels, of course, but look, it's found itself selling off that point to about 30 pips. Now, what it does from here is going to be an interesting one, because realistically, if it fails here and continues to feel downward pressure, and we see a series of lower highs and lower lows on a smaller time frame, like say a 1 hour or a 15-minute, you can start to target that 130.150 again, which is the obvious support zone where it bounced off last time. But indeed, if it does continue on and break through the 20 moving average, and it needs to do it on a daily time frame, of course, then we can start looking at the next real resistance point, which is around that 133.80 area. You can see all the way that resistance right through this zone here. But in reality, first it's got to do what it needs to do and break that 20 moving average. So we're not doing anything here until that is actually broken. Break above the 20 moving average, and we look for trades up to the 133.80, and a rollover here on a smaller time frame, it starts to trend down. and we look back to the support at around that 130, 150. So pretty good range trading on the USD CAD, but it was a good bounce zone from this level. So hopefully you were able to catch that move, because the 20 moving average is what we were aiming for, and it basically got there in a couple of candles. So yeah, pretty good trading on the CAD. All right, US dollar yen is another one that hit its target this week. You can see that we've been obviously moving and trending very, very heavily in one direction. The end target was around that sort of 144.80 to 145. Look, it's continued on with the job. It never came back. You know, realistically, if you weren't already in it, it was going to be difficult to get into, primarily because it never actually came back to give you an opportunity once it did break through that zone. But if you are in it and you want to look for a place to take profit, obviously that is the level here that we've already just hit. Now, yeah, this does move in waves, and I've said this a few times. A lot of the time you'll see that the previous move is the same as the existing move, almost to the pip. It does that a lot. Generally speaking, you know, you do find that a lot of the time the market does actually move in more than one wave. It usually moves in 2 waves after the initial burst. So you can expect a 3-wave movement a lot of the time. But yeah, this is one where it's already starting to hit relatively strong highs, and there is a lot of resistance at this point here. So to me, it needs to break this zone before we take it seriously on a long, but I would like to see it come back. Yeah, I don't really like things getting out of control without a pullback, because quite often the pullback happens when you've got your stop loss in the way. So we certainly don't want that. So what we're looking for here is a bit of either a test and a breakthrough and a test of this level from above, or a rollover and a test of the next level down here around that 142. Seems like a long way away now, but look, this does move in very, very big waves. It wasn't that long ago. It was down here, obviously, as you can see. So realistically, it needs to turn around and pull back to the 20 moving average and this level here to give us very strong confidence that we can get into the long. That's what I'd be looking for on this trade. And really, if it breaks up higher and then tests it from above, then we look at it from a different lens. But at this stage, I think the resistance is very strong in front of it, and I wouldn't be keen on taking it without either a break and then a pullback to it, or a roll reversal at this level and come back to a decent level of a pullback, and then look for long opportunities from there. But really good moves on the yen, and hopefully you're able to take advantage of those if you're already in it from all the way down here when we really liked it. Okay, over to the dollar index now. Again, obviously strength has pulled off on it. It's got a series of higher highs and higher lows now on a daily. Hit the 200 moving average, as you can see through here, but that's also a resistance zone. You can see here it was very strong support. So it is a roll reversal with 200 moving average layover. Always a little bit scary, so you need to be a little bit careful there. But it is definitely lightning bolting at the moment. So really, obviously the euro is the one we're really concentrating on in this instance. So we're going to go to the euro now. As you can see, a fair bit of weakness. Hasn't quite got the lightning bolt that we would really want, but look out if it does. Look, it had a really, really good run. Yeah, got all the way up to the 110 again, but it's shown the weakness that we would expect. Yeah, with the talk of the rate decisions in in the Federal Reserve. So really, you know, it's a bit of a wait and see on it. If it's going to bounce, this is the level it's going to bounce from. Yeah, it's got a 20 and 200 moving, 20 and a 50, sorry, to lean on. And obviously the dollar index is facing a 200 right in front of it and resistance. So this is the place it's going to turn around if it does turn around. But if it fails here and makes a series of lower highs and lower lows on the daily, which yeah, it's trying to do, and that's going to require a close below the 50, then it's probably going to open itself back up to a move all the way down to 107 again, which is where the previous support was found, which is a very, very strong level through this level here. And obviously the resistance in their very strong roll reversal zone. So I'm thinking that a break of the 20 and the 50 on a daily would see us targeting the 1.7 level again. But a reversal of this level here, the first point I'd be looking for is the 110. The easy trade will be up to the 110 because that's already been tested and proven that it can get there. But just very, very important zone for it at the moment. What it does from here, look for a roll reversal on a smaller time frame or a breakdown on the daily to pick the direction of where this one's going to go. And then we'll go over to the US 500, of course, and this was the star of the show from a technical standpoint. It landed exactly where we needed it to land it on the 200 moving, 20 moving average, sorry, in this strong support zone here at the 43 sort of 30 area. Very, very good level. Look, it's a 38.2 pullback fib, of course. It's got all of the attributes of basically a trade that's going up. You can see that we've got the pullbacks of the 20 moving average all the way up there. It's been very, very strong. This was no exception. It's what we wanted, and hopefully you're able to take advantage of that. Look, the level I put there, that green line, I put it there for a reason, because when you look for a 20 moving average, you just don't automatically buy there. You need to go to a smaller time frame to really appreciate how to get in. So you could go to a 1 hour off that level. You can see the bouncing off that level. Once you've got a series of higher highs and higher lows, you're right to go, as you can see. And even if you go to a 15-minute chart, it gives you a very similar pattern. All right, just going to fix this up. Change the percentage. There we go. As you can see, off this level, a series of higher highs and higher lows on the 15-minute off that 20 moving average. So this line here represents the 20 moving average on the daily. So it's really, really important to highlight that. So when you do go to the smaller time frame, you know where the reversal is, and then you're able to take advantage of it. So yeah, really good trading on the S&P. Look, it's one of those ones now where it's obviously, if you're still long, yeah, the level that you're looking for is where it was previously at around that, switch this back, at around this level here of the 44 sort of 30 area. That's the easier trade because it's already been tested. But if it does fail to reach that point and turns around from here, you're gonna not really want to go short until it actually breaks that 20 moving average and gets below the 43 level flat. So really, it's in that zone. If you're getting above, if you're going long, you're going to the 44.30 area. That's your first target. If it does start to turn around and we get a daily break below the 43, then we're going to start targeting these lows around the 41.80 again. So yeah, pretty good trading on the US 500. Hopefully you're able to take advantage of that, because that is technical analysis 101. So I hope you had a great week's trading. I think there's been some really good opportunities, and the levels we were talking about did bounce and hold off this week. So hopefully you're able to take advantage of those. Have a fantastic weekend, and I look forward to seeing you all next week.